Righto, boys. 29Metals, they've released an operational update for their Capricorn Copper project, one of the many projects that were unfortunately severely affected by the heavy rains in North Queensland. So very once in a 100-year or multiple bloody 100-year event by the sound. So I saw some check out their announcement. Actually, it shows some pictures of where the original creek was and where the flood levels got to at this operation. It's unbelievable the amount of water there. So look, lads, what do we think about this? They're obviously on hold for a bit still. Till next quarter, they're not getting underground back on going. Big impact on 29Metals.
Yeah, that's it. So it might be even a little worse in some regard to what you just highlighted there. And yeah, I'd recommend checking out the photos. They're pretty crazy. 29Metals has definitely come off a lot worse than Evolution and AIC Mines. They're sort of neighbours in that Mount Isa area. And it's really not a great update. So if you pick apart the Capricorn Copper project, you look at Esperanza South underground, and that's been hit the hardest. This is the ore body that provides 60% of the ROM feed, and it's not really scheduled to start until the first half of 2024. And if you flick through the report, you'll actually notice in the footnotes that it says Esperanza South is yet to be finally inspected, as it remains inundated. So
completely flooded, I assume that means.
Exactly. Yeah. So that first half of 2024 is really just an estimate of when they can get going there again. So the company did flag that the smaller sort of ore bodies, Mammoth, Greenstone, will have sort of phase starts in the mid-September quarter, so a few months away from now. And they also flagged that the water treatment plant looks like it's a complete loss. So trying to look on the positive side of things for the company, there was no damage to the tailings facility, and there was no water discharge either. So this is something that had sort of previously attracted a bit of scrutiny for the company. So it's good to see there's no issues, as flooding can at times have pretty adverse impacts on tailings facilities at mine sites. So I
think they got, was it 20 inches of rain in 5 days or something, 500 mil.
Well over 1,000 mils, so pretty hectic rainfall that we saw there. So yeah, the weather really impacts the ramp up story for 29Metals as a whole. Of course, 29Metals also has the Golden Grove asset in WA, and if you look at their sort of revenue by asset, that makes up roughly 2/3 or so, and this Capricorn Copper makes up about 1/3 or slightly less than 1/3. So the Golden Grove is the flagship asset, but this doesn't help the ramp up story at all for the company.
I'll just give a bit before you go on, JD, what inundated and flooding an underground mine means. Like, the whole mine is underwater, but that includes all your critical infrastructure, like your substations, your fans, all the electrical components you would anticipated are ruined.
Potentially some equipment too.
Yeah, and there'd be, I'm not sure how quick they got out from underground, but there's possible machinery down there that is like, and once it's been underwater for that long, you can pretty much kiss the electrical components goodbye. So
yeah, and that's the issue.
And then you got to pump it out as well.
Yeah, with the equipment that they need, I think it specifically relates to the water treatment plant. There's lead times of 3 to 4 months, so that's really hindering the restart at the operations there.
And they've lost the workshop as well, by the sound.
Yeah,
so
all the tools, everything.
So all the fitters, mechanical personnel, all their tools have been. So it's not just the company; it's the actual workforce that have been affected, and those tools are paid for by the people, not the companies.
Yeah, so it's worth mentioning that the company's obviously been in touch with insurers, and we'll keep an eye on how that plays out and if they do get any cash. So digging into the company a bit further now, this is a company that was floated about 2 years ago. They were floated in 2021, spun out of a private equity group, EMR, and it's been hard to judge how management has really performed. If you read their financial report, they report on a calendar year basis, but last year they pointed to COVID and employee absenteeism and stuff. This year, weather related. So it's been really hard to judge, as some of these assets ramp up, how the management has actually sort of performed.
Yeah. Yeah.
Difficult.
It's an interesting
They're
point.
difficult assets, like very difficult assets. Like,
Totally, and they're fair excuses. I mean, they're sort of these random events. But your point's well received that it's challenging to actually assess performance amid that sort of environment. And yeah, this company did come from EMR Capital, and private equity listing a company on the ASX. It's kind of, it doesn't happen all that often that you get an IPO of a production asset. The only time it never really happens is when it comes via private equity.
it's one of the biggest IPOs in Aussie history. Correct me if I'm wrong. It was pretty decent size, wasn't
well,
it?
certainly in mining, it was pretty substantial. I think my numbers could be wrong here, but I think it was about a $500 million IPO in terms of the actual equity raise component, and of course, like I can't remember what proportion of that was actually a sell down from EMR to facilitate it all, but it would have been a large portion of it. And just touching on that IPO, I think private equity. What is private equity strategy when it comes to mining? Private equity, they take a view on both the asset, but they also take a view on commodity cycle. So they look to acquire assets at the bottom of the cycle and assets that they believe they can turn around, but they're usually pretty smart money. they have a good outlook on what the performance of their assets are going to be over the life of mine, and that if they time their entry point in the commodity cycle well, then they'll look to exit where they think it's pretty juicy as well. So I just to all investors, whenever you're sort of buying private equities bags, it's you always just sort of think, what do they know that I don't?
Yeah, another private equity asset which is a bit thought-provoking would be the asset being spun out of a Barclays Natural Resource Group, the neighbour to Sandfire in Botswana, which they picked up out of insolvency roughly 10 or so years ago, and they're now looking to sell that. So interesting. So I think there's a great discussion that comes up now with the share price having more than halved for 29Metals over the past few months of, does this become an M&A target? So we've seen a lot of acquisitions over the past few months on the back of share price weakness. Mincor, Newcrest, Oz, they all had performed quite poorly in terms of share price over the months sort of leading up to the bids coming in. And if you look at 29Metals, they're planned to produce over 80,000 tonnes of copper equivalent, so a bit over 50,000 tonnes of actual copper in there, once everything's running up and smoothly across the two assets. So that looks pretty attractive, and at an EV of 700 million last time I checked, it would sort of be in keeping what we've seen in regards to these sorts of acquisitions and how they've performed. But then, as sort of Trav touched on, this is an asset that's a company that's spun out of private equity. So EMR still holds 45% of the company. And then you have large institutions, AusSuper, Yarra, Ausbil, Perpetual. They're all holding between 5 and 8% stakes in the company. And the IPO was done at $2 a share. They're now trading below $1.20. So you kind of think, what sort of premium would be needed? Would EMR block any sort of transaction? It's a sort of tough one to think about. There's absolutely no chance that you'd see something like what we saw with Mincor, with the company just making a bid, putting a huge block on the market and just buying up the stock, because you wouldn't get anywhere near the sort of volume you need to take control of the company. So it sort of makes you wonder.
Well, you just look at Golden Grove as an asset. The history of it. I've got most of it. So Normandy owned it originally, 1991. Newmont took them out. They then offloaded it to Oxiana. So Oxiana owned it. Pretty sure then it was MMG owned it. Then MMG sold it to EMR Capital. Then EMR has spun out 29Metals. So that mine has just gone through a lot of hands, and it reflects the difficulty of the asset, because now it's deeper, now it's hotter. The ground conditions are challenging. It's very spread out, so to get the dirt out of the hole is a difficult thing. So when you got challenging assets, like it's hard going. It's not like a shallow mine where you can rip gold out quickly.
Wasn't it a gold mine to start with, Matty?
I know there's gold there. I can't comment on that.
Normandy. So yeah, I think
Yeah,
it
it
was
must
a gold
have been.
mine. They still get some gold out of it, but I reckon its history was originally as a gold mine.
Producing a lot of zinc now as well.
Yeah, and like down deep, there's pretty sure there's a big zinc ore body like that they're heading towards. But when you're down to 1,500 metres and going deeper, every 100 metres just gets harder and harder and harder and harder to get it all out and deal with the heat. So yeah, bit of underground insight for you lads.
Beautiful, mate.
That's what I'm here for,